It's a bear market that's bouncing, Scarlett. We have to put it in context. It's August. It's a perfect time of year to flush out the shorts in a bear market, get everybody excited, and then go back down. So it's finally bounced above its 200-day moving average, which is rolled over. But the key way I look at Bitcoin is it's a horrible performing asset with a high correlation to the stock market, and it has a major risk of going down more. Good examples on the year, it's down about 20%. Stock market's up about 15%. On a 5-year basis, it's up 40% or so. Stock market total returns around 80%. So I put on my risk manager hat and I say, yeah, this is a horrible asset. It's high volatility, high correlation, and there's unlimited supply of cryptos now. So I will be on the record that this is a dog. I think it's going to roll over by the end of the year. And the only thing that will support it now is the stock market has to go up.
So who trades Bitcoin these days, Mike? Retail versus institutional. Who's doing it these days?
Exactly. That's what it is. It's a trading vehicle. Now there's millions of them. Go trade. I'm an ex-trader. I get it. You're supposed to trade it, but most of them just like to buy it to go higher. That trade's over. Like even precious metals, that big rally is over. All those traders have shifted over to the stock market. But who's trading? They can trade all they want. But I look at it from an institutional standpoint. When people say institutions are coming in, I'm like, why? It's a horrible performing asset, high correlation. Just from a risk management standpoint, it's just a bad asset. Something's got to change. The bottom line, though, is for me, for a whole crypto spaces, there was one in 2009, and now there's millions. It's way oversupplied, and it looks like the whole thing just needs a purge, and this is just a bounce within the purge.
Mike, you probably know this, but I co-host Bloomberg Crypto every Tuesday, and the price action of crypto has really not been anything too exciting since last October. But the industry has moved on to things like prediction markets or tokenization, all these other ways of transforming the financial industry from what was traditional infrastructure to something that incorporates the new blockchain technology. Is that kind of movement towards this new technology going to at some point have an impact on the price of Bitcoin and the other digital currencies that kind of underlie all of this?
Well, you nailed it, Scarlett. That's the key theme about this space. The technology is overwhelming. The proliferation of crypto dollars, stable coins, the tokenization of assets makes real value, and really value, that's my key point, is anything you see that tracks like a dollar of an asset, that has a basis. But all the other cryptos like Bitcoin, there's no basis. They track nothing. It's all hopium. We just need to purge a lot of those excesses. But I think that's the key thing from all along is I love the technology, but the key thing to remember is Bitcoin was started out as peer-to-peer cash. Well, you don't need that anymore. We have crypto dollars. And that's part of what I think people are learning global is I can exchange dollars on my phone via stablecoin. I don't need to take the risk in a highly speculative digital asset anymore. And by the way, there's an unlimited supply of those.
All right, let's switch real quick before we let you go, Mike, over to crude oil, higher yet again over the last several days. I guess reflecting some increased tensions in the Middle East. What's the oil action telling you here?
Well, definitely a key thing, Paul. Let's watch that first contract expires today. That's September. We move to October tomorrow, and that's around 86. The front contract's around 88. So that's going to happen. It's all about Mr. Trump. The key question I need to ask myself is, you look at January natural gas in the U.S. That's the apex of the #1 measure of heat, electricity, and fertilizer. It's down 15% on the year as we approach winter. I have a feeling the crude oil is going to follow it and get lower inflation and energy inflation into the year end. And the #1 person who can control that is Mr. Trump. So what he does, I don't know. But the bottom line, as we're seeing right now, is the rest of the world's purchasing a lot of crude oil, most notably U.S., Canada, Guyana, Brazil. All these countries are on record exports now and record production. And we're finding out the Gulf is important, but it's becoming less important as the rest of the world shifts to more production and less demand.